Hello and welcome to today's KraneShares webinar, China Internet Q3 Financial Results Recap. My name is Brendan Ahern. I'm the Chief Investment Officer here at KraneShares Exchange Traded Funds. And I have the great pleasure to be joined today by Fawne Jiang of Benchmark Capital, which is now a StoneX company. Fawne and I wanted to review what's been a Q3 earnings season, as well as looking ahead to Q4 and 2026 results for the companies that we hold within the KraneShares CSI China Internet ETF, KWEB. It's certainly been a interesting period to be invested. We've seen this re-rating of Chinese equities taking place. A lot of the performance we've seen from the companies within KWEB itself has really been multiple expansion. And I think one of the things we're really interested in tapping Fawne, your insights are on what are we going to see going forward? What do we see in the past in terms of some of the fundamentals? Are we going to see a confirmation of some of the price action we've seen? Certainly as we look further afield to 2026, it's been great to see a number of strategists actually upgrading the space. Certainly we're seeing flows come back into the space. But really, I think today's really about the fundamentals of these underlying businesses. For those of you who are looking for continuing ed credits, please email us at ce@kraneshares.com. That's Charlie Edward at KraneShares for a CFP or SEMA continuing ed credit. For those of you who have questions, please don't hesitate to email us during the course of the presentation, as we'll have plenty of time for a healthy Q&A. You can do that if you're joining us on Zoom, just simply with the Q&A button. For those of you live streaming from KraneShares.com, please email us at info@KraneShares.com. Very briefly, for those of you not familiar with KraneShares, our founder, Jonathan Crane, moved to China in 2001. There he established a business geared to China's growing urban middle class. But living in Shanghai, he experienced firsthand how the adoption of mobile technologies was altering China's economy, and particularly the consumption habits of Chinese citizens. Ultimately, John sold that business to a US multinational, moved back here to New York, but was shocked when he looked at the China ETFs as well as China's exposure within broader emerging markets. It was all old China sectors: financials, energy, industrials, materials. There was none of the new China economic sectors that he had experienced in China that were really driving the economy forward. Secondarily, the definition that China was only Chinese companies listed in Hong Kong. Excluded from that definition were US listed China ADRs, as well as the second largest stock market in the world, the Shanghai and Shenzhen market. And that was really the impetus for Jonathan creating KraneShares, a China-focused ETF provider. On the next slide, obviously we're most known for KWEB, our China Internet ETF, which is listed in London, actually cross-listed in Brazil, Mexico City, and starting today in Abu Dhabi. So certainly we've gone very much global with KWEB and our insights on the China internet space with the help of partners like Fawne and the great team at StoneX. But certainly there's other growth opportunities within China. We're big believers in healthcare. Today's China at last night spoke a lot about solar and what's happening there. We have a China Clean Tech Fund, but we've also taken things we've seen in China that we think are going to go global. So certainly what we've seen in terms of internet adoption, KEMQ is the EM version of KWEB. We also listed one of the first global electric vehicle ETFs back in 2017 based on what we saw happening. More recently, we launched COID, our global humanoid robotics ETF, just based on what we're seeing happening in China, but also broader Asia. more recently with Tesla around humanoid robotics. Certainly, we also really pioneered investing in carbon credit allowance futures with KRBN. Our colleague Luke Oliver really runs that great research effort supporting the carbon suite. We've also listed exchange traded funds with great partners like Nancy Davis of Quadratic Capital, Mount Lucas, CTA with KMLM, more recently with both Hedgeye, a global macro research firm, as well as Man Group, one of the largest alternative managers, or the largest publicly listed alternatives manager globally. Okay. Moving forward, Fawne, we've gotten to know, gosh, it's been probably at least 10 years now, and Fawne has very generously over the years to come and speak to our client base because of her great bottom-up insights on these underlying companies that we hold with Fawne. Congratulations to the Benchmark team for the recent ownership change with being part of StoneX, a firm we've gotten to know very well from not only just their expertise on commodity futures trading, but also ETF market making. So net, it's been a great relationship, and really excited, Fawne, to hear your insights on the next slide. I know you want to walk through a few slides, and then we can get into talking about some of the results specifically. So yeah, with that, I'll hand things off to you, Fawne.
Thank you, Brandon. Thank you very much for having me here. It's a great pleasure to meet the investors for KraneShares. And again, it has been a long-term relationship. We really appreciate the partnership. And then it's also my pleasure to report the 3Q earnings for the China Internet ADR space, which is actually quite exciting quarter, I have to say. If we look at the next slides, have a short, I think, report card put together. If we look at the details, a couple of our key observations here. Number one, if we look at the performance against expectation, pretty much majority of our coverage space, we're talking about 18 companies across the different verticals of the China Internet, actually beat top line and bottom line. And secondly, if you look at the details, notably, the big cap names, we're talking about the bellwether names of China space, the Alibaba, the Tencent, the JD, the Kuaishou, across board, actually exhibit double-digit growth, which is actually very, very impressive given the underlying still relatively, I would say, geopolitical tension. I think local still evolving macro environment. So from the outperformance of big cap names, actually showed I think the strengthening fundamentals across board in this industry. And interestingly, if you look at a couple of the leading company, Alibaba, their growth in 3Q actually accelerated. We're talking about 15% top line growth. Of course, underpinned largely by their cloud, but their e-commerce business was also very, very solid. We're looking at 10% CMR growth. And similarly, Tencent, very impressive, accelerated growth in 3Q, also looking at 15% year-on-year growth. And then if we're looking below the market cap, we also notice quite a few interesting turnaround story in the mid-cap space. A few examples here. TME, so that's a strong outperformer for the space with 21% year-on-year growth. And then VIP Shop, that's actually the leading player for the online apparel vertical retailer, which is basically discretionary spending. That has been the concern, for I think China in the past couple of quarters. And then after 5 quarters of struggle, challenging growth, they actually turned positive growth in 3Q. So basically, I think it's a sign of macro stabilization. And next, also want to talk about the, I think, positive earnings, I think, growth. We actually see a cross-board efficiency improvement. I mean, of course, partially driven by the continued diligent, I think, cost and expenses management. But on top, we actually see AI becomes a productivity enabler that helped companies to improve margin, across board. We can go down to the details later. So, and then, I mean, of course, if we're talking about some laggards for the quarter, I think there are a couple companies that stand out. One is probably Baba missed the bottom line. And then Meituan, that's our leading local services player, missed their top line and bottom line. That's largely due to the competition on the food delivery and the on-demand quick commerce space. That's really the vertical we're seeing escalated competition since the spring, March, April. And so that, I mean, if we look at the overall investment in that vertical, we're probably looking at roughly 80 billion RMB investment among the top, I think, players. Of course, that's actually substantially depressed margin for Baba, for both Baba and Meituan. So that's actually one area we're seeing some, I think, margin pressure here. So, and then moving on to the next slides, again, just want to recap some of the thematic trends in the space. First of all, we believe we have seen signs of macro stabilization, especially on the consumption side. We see consumer more or less have a stable outlook, relative speaking. As a result, I think there's a recovery of their, I would say, normalized spending pattern. A couple of, I think, example here. Like, first of all, look at the retail, China retail growth for the quarter, 3% was actually fairly solid. And physical goods growth, 8%. That's actually notably higher than the 6% in the first half of the year. And secondly, we've looked at the commercial payment volume growth, which basically reflected in Tencent's, I think, earnings. This is already the second quarter we have observed commercial volume, payment volume recovery. That's really a reflection of China consumer everyday daily spending. Your coffee runs, your bakery shops, your grocery shop. So, and thirdly, I think one of the pushback or debates on the relatively soft consumer spending has always been, I think investors have the impression, China consumers spending less, partially reflected in the hotel RevPARs, because hotel RevPAR in the past 5 quarters has been declining. So, and again, just want to report H World, that's a leading player in the China hotel chains. 3Q, this is the first quarter we see RevPAR stabilization. And we do expect RevPAR to improve in 4Q and arguably improve throughout 2026. And I also want to point out, of course, there's a continued shift of consumer spending towards experience. So that's why we see Trip.com beats across board, driven by strong leisure travel demand. And similarly, we saw, the sports events, concert events, a huge, again, demand across board, really reflected in the earnings. And we touched upon the competition on the, I think, the on-demand quick commerce competition. So on the positive side, we do expect 3Q, the overall loss should be picked out. It seems like all 3 top players, we're talking about Alibaba, Meituan, as well JD, everybody's focusing on the unit economics improvement heading to 4Q. So from that perspective, we are looking for margin recovery in the coming quarters. And then, of course, the next big theme, probably not surprising, is essentially we noticed unwavering, I should say, laser focus on AI and technology innovation across board. That's really reflected in a couple of interesting, I would say, points here. Number one, I think AI is delivering a proven and tangible impact at scale. We actually see from multiple companies, we see AI is becoming a meaningful incremental growth driver as well as a revenue contributor. So take Baidu, for example. Baidu for the quarter, I think their AI and power revenue reached roughly 10 billion RMB. That's close to 1/3 of their total revenue. That's how big their AI-driven revenue becomes. And secondly, if you look at their AI growth, their cloud was actually growing 21% for the quarter. That's the general AI cloud. But if you look at the Gen AI subscription-based AI cloud growth was actually accelerated to 128% year on year. So very impressive. I think strong momentum. I think we heard the similar commentary from Alibaba. I think Eddie, the CEO, is actually talking about the demand is overwhelming, and he expects demand will continue to outstrip, I think, the supply in the coming is a structural, I think, theme and trend. So he actually expects solid AI cloud growth in the next 2 to 3 years. So it's not really near term, the 3Q. We're really seeing structural opportunities for the space on the AI, in particular on the AI cloud side. So I think just a very interesting thematic observations from the quarter alone. And just quickly, since we talk about longer term, I think revision opportunity as well as the, I think, re-rating opportunities. I think a couple of the driver we can see on our side is that on the next slide. So number one, I know there's general concerns on China macro, on how consumer are holding up. I think the big difference between China versus the U.S. is the saving rate of average Chinese families is very high. Actually, I just chatted with a management team, Chinese ADR management team who actually visit New York. Had a meeting with them yesterday. And the same, I think, message. The saving rate in China right now is record high. So I think Chinese consumer definitely have the dry powder to spend. But at the same time, I think they pick and choose where they spend their money. Historically, we're seeing majority of the spending focused on the physical goods. People buy clothes, buying everyday food, home goods, electronics. But now I feel like we get to a certain point. I think average family probably fairly, well, I wouldn't say saturated, fairly, I think, set up, with the physical goods. And people are really shifting their incremental spending or budget towards more like immersive experience, digital services, and also entertainment. That's why, interestingly, again, if we look at the score card we put up together earlier, the 3 highest growth company for this quarter are Tcom, Trip.com, 16%, Tencent, 15%, and TME, 21%. All 3 names actually have great exposure in the travel, in the entertainment, in the gaming, immersive experience. So actually, it really shows where the new growth engine come from. So
it's funny, it's maybe about a month and a half ago, the Wall Street Journal had an article about how poor the spend consumption in China is, and it's kind of funny. They interviewed a woman shopping, I forget what city they were in. She was at a discount clothing store, but it mentioned that she owned 4 apartments, and I was laughing because I was like, "Oh, you picked out this super rich person who just is cheap, or is buying discounted goods because that's their framework." And so to me, it was just so emblematic of the wealth in China. It just not, we're just seeing it, in really in the bank deposits, in the bond market, a smidge coming back into equities, but this huge dry powder that could come back into the space. It's maybe we're seeing a little touches of that with some of the consumer subsidies, auto, historically, home appliances, electronics.
Yep, totally. And to Brendan's point, I think consumer has a very healthy balance sheet. And then again, but they become more rational. They're more calculating. But that being said, to certain categories, I think they downgrade, like shopping the value stores. But I think in certain spending, they're very, I would say, really, I would say, pamper themselves. If you look at the concert ticket price in China, some of the top, I think, artists or musicians, they charge like a couple of $1,000 per ticket.
Oh, wow.
And then the concert has sold out everywhere. So they show how strong, how robust at least a certain segment of the consumers are, if not cross board on the consumer side. So I think it's evidence of underlining healthy balance sheet. I think there's a capability to spend. Of course, I mean the biggest job from China government is really how to encourage people to spend, right? So I think people have to look positively about the future, and then they feel more comfortable to tap into their savings. So that's actually, I will lead to Brendan on that. I'm sure we'll talk about the policy direction for next year. I think that's really play into that, the big structural policy direction. Just want to move quickly on to the next topics we noticed is global expansion. I think at this stage, Chinese, like at least large cap Chinese companies have, number one, substantial resources. We're talking about big balance sheet. And secondly, strong industry know-how. And thirdly, I think they're eyeing global markets. So we already see some early movers. Actually, I ranked my some of the companies in terms of I pretty much check everybody on the international exposure because I think everybody has I think a goal with it. Although at this point, different companies have a different exposure. The biggest exposure right now is actually PDD with their Temu global expansion. I think roughly 1/3, if not higher, of their revenue come from international. And in addition, Trip.com, again, substantial international player. If you look at the beat of their quarter, really came actually from their international growth. They're already fairly substantial in Southeast Asia, some of the East Asian countries, but they're still growing their international business by 50% plus.
Wow.
And there's no deceleration in 4Q, even we're looking at the higher comp. It just shows how much potential headroom on the market adoption, on their own market share gain in these some of the low-hanging fruits markets, because I think Southeast Asia, if we're talking about online travel penetration, is still fairly low. So they really leverage their know-how in China, translate into their expertise in the other markets. So
I remember it was years ago they bought it was a British Roadrunner years and years ago, and it was
scanner.
Exactly.
Their anchor point into the global market. So again, I mean their global revenue, when they bought the Skyscanner was only like 5%, but now it becomes almost 20%. I think we're really onto like 30% in the next couple of years. So Trip.com is, I think, in the transition to become the global travel agency versus just a China, local OTA. So
well, it's certainly very easy for foreigners to use Trip when you're in China, booking trains, and it's a very, very intuitive system.
Yeah, totally. I mean, I think the difference between them versus some of the other global players is a one-stop shop. So they offer, the air, they offer hotel, they offer local services, including cab, the basic mobility services, as well as the travel tour. So you pretty much can fulfill all your need in that one platform. So and also similarly, I mean, Tencent, we haven't talking about Tencent. Tencent, interestingly, as of now, only roughly 10% of their total revenue coming from international, but from the gaming. So, and then Tencent right now in China is 40% market share of China domestic gaming market, but globally, they're still relatively small. They're 5% global market share. But if you look at in the last couple of years, I think they really successfully cracked the code in terms of cross-selling IP across market, and also cross-developing game across different devices. We're talking about PC, mobile, as well console. So, and then successfully, I think, localize different contents based on the culture, based on the local, I think, preference. So from that perspective, I do think they're very well positioned to take in more market share on the global gaming industry. So I think just a very interesting dynamics of leading Chinese players going global.
Yeah, I remember, Kuashu.
Yep.
Obviously, their Kling AI big driver, but read where they're doing business in Brazil.
They are. So
yeah.
it's been there a couple of years, although I would say still probably early stage. But just given how big the market is, and if we look at Brazil, e-commerce 15% penetration versus China, like versus US, we're talking about 25, China close to 30% penetration, still substantial headroom. So that's why I think a lot of these players, I think Douyin, which is a ByteDance, of course, Temu, as well as I think Kuaishou, they're all testing the market in Latin America right now, like Brazil. It's probably the first rational step.
Yeah, well, just a very urbanized population, so kind of lends itself to particularly e-commerce. Some very logical move.
Totally. So again, I think in the future, if we're looking ahead into 2026, I think international growth will be more integral part of China ADR growth. Some of the companies, I think, will probably be their key drivers. I think like a major key drivers for the blended company growth. I mean, Meituan penetrated into Middle East. They also just started to test.
Well, that's what I say, Baidu as well with the robo-taxis.
See, so I think again, with robo-taxi, probably I think naturally to our lead to our next topic. We're talking about the AI and innovation-driven ecosystem integration here. We see AI becoming such a transformative, I think, driver for Chinese companies, Chinese ADRs, not just for their own domestic business. I think on the international front, we see substantial headway. So take robotaxi from Baidu, for example. I think for the most recent quarter, actually, I should say October, they reported 250,000 weekly average driverless operation rise.
Wow.
So that's a very impressive number. I think Waymo actually reported a similar number in the spring. So that means Baidu's Apollo Go, essentially their robotaxi, is actually in terms of scale, is really not that far from the global leader. And then if they are operating 22 cities globally, I think they just obtained a license from Abu Dhabi recently, and then they're also testing, I think, in Dubai right now. So again, global expansion on the way, underpinned or bolstered, I should say, by the AI and the technology innovation.
Yeah, and I think actually just prior to your arrival, there was some chatter about Meta actually using Alibaba's QM.
So talking about AI, right? Talking about Alibaba, I think global investor, because I think exposure and also relatively speaking, I think the news flow, I think people probably still are underestimating the power of, first of all, I think China AI growth, and secondly about Baba's, I think, positioning in that world. So I chatted with some of the industry, I think experts, I mean, people's view, but I think some of the experts' view here is the AI, in terms of the AI space, is essentially, I think, I wouldn't say it's a race, but at the same time is where the two countries that are going to benefit most from it is clearly China and the US. So just given, if we look at it, a few levers to develop AI, we're talking about resources, including land, like a basic utility power, availability of the power. And then secondly, we're talking about the technology capability, large language model. And the Chinese players, especially Baba, I mean, they just recently launched their Quan 3 Max, which really rank among the global leading large language models in a lot of, I think, benchmark valuations out there. And then, and the thirdly, we're talking about talent. So I think we also have a pretty good talent pool, both on the US side as well in China. China has been lagging on the, I think, on the AI side has been the chips, of course, on the hardware side. Although now we have the news about US government approve, I think, chip shipment to China. Seems like it's a new chapter from here. And secondly, we also heard a lot about China local development, pretty fast local development on the chips, on the hardware side. So I think China is going to pick up like momentum from that perspective. And then when it comes down to Baba, I think Baba really stands out in the China space as the potential AI winner or beneficiary. Is really because they are one of the few, I would say, full stack AI service provider from the fundamental computing, storage, infrastructure, hardware to the, I think, platform layer. Their 通义千问, that's open source platform, supports over 200 models, big or small, really tailored to different developers' needs, as well as supporting I think 120 plus languages, different languages.
Wow.
So that's why, based on my, I think, tracks, it's one of the mostly adopted, I think, open source platform by global developers, still growing tremendously. And most recently, they launched their own, I think, a personal AI assistant, very similar to ChatGPT. They call Quen. And within 1 week, I think we're talking about 10 million download.
I think today 30 million monthly users. And obviously, I think it was a few weeks ago, Airbnb's CEO mentioned that they're using, and then just today that Meta is using. Clearly, and Alibaba has the Quark, the glasses now. What about Tencent on AI? It's interesting. Where Alibaba very communicative on what they're doing. Tencent kind of they're obviously a big player. They just don't seem to be as communicative. They kind of just go about doing their business and just stay very focused, which is very commendable. But I'd be very curious for your take on Tencent on the AI side.
I think the two companies at this stage take a slightly different approach because Baba is actually adopting AI both internally as well as externally. That means, internally they really transform, I think, their business on the e-commerce side, on local service side, international side, as of course on the cloud side, to leverage the AI technology to improve efficiency, to drive, like for example, on the advertising side, to improve the targeted effectiveness. And that's why we see that their CMR, the revenue, is actually growing faster than the GMV. There's effectiveness of the technology, ad tech improvement. And at the same time, Baba is providing, underlining, the GPU computing services to external clients. That's where we see the cloud growth acceleration here. And then Tencent is slightly different. I think Tencent stage focuses a lot more on catalyzing their growth, internal growth, through AI innovation and AI technology adoption. For example, on the gaming side, they leverage a lot of the AI technology to improve the content design, the interaction between NPC versus the players, to increase the user engagement and user experience. Similarly, on the advertising side, they do leverage the AI to better profiling consumers and their behaviors to be more efficient, effective in the advertising conversion. So that's where they're playing right now. I think one of the constraints Tencent has in the recent quarter is really the supply on the chip side. So as a result, they have not been very aggressive to open up the AI computing power to the external customer yet. So that's why if you look at it, Tencent cloud growth quarter, we're looking at teens, which is actually notably slower than Baba and Baidu. These two companies more, I think more active engaging external customers. But at the end of the day, with the chip availability getting better after the government approval, so I do think Tencent is going to catch up substantially, especially considering how comprehensive Tencent ecosystem is the largest social network, I think, in China. I think there's different areas they can substantially leverage AI to be both, I think, a revenue growth multiplier as well as efficiency driver. So again, I think Tencent is actually still yet to come in a sense.
Interesting.
So, but I think it's a very interesting name, worth watching in the coming quarters.
I mean, it's
For
the biggest.
2026, yeah.
It's the biggest company in the space.
Totally.
So it's yeah, you know, there's that movie Goodfellas, and Paulie is kind of the boss,
Yep.
and to me, Tencent is the big, strong, silent type like Paulie. But
Totally.
and then you know, Baidu, you know, such an interesting company. I mean, very wisely took early profits from their Google, their traditional search business, invested that in autonomous vehicles, you know, as well as early with some of the AI. But kind of curious your view of, you know, maybe start with, you know, Baidu.
Yeah.
The core business has struggled a little bit, similar to, you know, what we're seeing with Google. You know, search is down because of these large language models. But then, you know, I'd be kind of curious, besides your view of their AI opportunity set, you know, the kind of your sum of the parts analysis.
I have to say, but like Baidu for me is actually one of the most interesting AI story in China. It's also probably the most, relatively speaking, underestimated, overlooked name. I mean, Baba, like, you know, we're bullish on it, but I do think a lot of investors relatively more in a similar view. But Baidu is more controversial in a sense, to Brendan's point. They have been struggling for their core search, traditional search, because of large competition and also general, I think, advertising growth slowed down.
Good point.
But at the same time, if you look at the, you know, the stock right now, this is a 45 billion market cap company, and close to half of their market cap is actually in cash. So it's like basically we're looking at really deep discounted valuation. And secondly, we have to break down, you know, their business. As we point out, they're one of the leading GPU cloud service provider in China, and very similar to Alibaba. They're also a full stack AI service. Again, have the full stack AI service technology, so they can provide end-to-end solution to different verticals. And most recently, we see they make headways in, you know, in verticals like transportation, energy, logistics, and the ports. And then if we look at different pieces of their business in terms of some of the parts, right? For example, Robotaxi, we mentioned that earlier. Their, I think, monthly driverless operation-wise is actually getting close to Waymo's level. If you look at Waymo's valuation, the last round of valuation, I think 45 billion-ish. So even on a bigger discount, we're taking like, say, half of the Waymo's valuation. You could easily put 20 billion there, right? As a, I think, starting point for Baidu. Especially another thing, I think Baidu could be very competitive globally, not just about their scale. It's also about their, I think they're going to be a very efficient operator globally, given I think their unit economics compared with Waymo will be much more profitable, because again, they are profitable in Wuhan. Wuhan is actually one of the most challenging cities in China with complicated traffic. And I think if they can break even in that environment, I could almost see they can pretty much break even in most of the, I think, major metropolitan area globally. So I mean, at least had the roadmap, their roadmap together. And secondly, we haven't talked about the, you know, the hardware, the chip size. So Baidu has been developing its own chip for a long time. Their Kunlun chips actually, as of now, is widely adopted by a lot of local players. So if we look at the benchmark company in China, so Huawei clearly is a leader in the space. And then, but we look at some of the other smaller comparables, for example, I think the Cameron, that's actually the number 2 player.
The latest,
right?
more threads.
So Cameron, I think their revenue for 2025, there probably should be somewhere close to $1 billion USD.
Yeah, exactly.
But they're actually 45 billion USD market cap.
I know,
so that, you know, it's more than, you know, actually 50
It's billion. Like a NVIDIA.
Yeah,
more.
It's bigger than Baidu total. Forget about Baidu chips, like Baidu total valuation. Similarly, more went public, I think yesterday or the day before, much smaller revenue scale, but same market cap as Baidu. So my belief here, I mean, it depends on company's decision. If Baidu is waiting to spin off Kunlun at some point, and also give their shareholder, the exposure to the chip valuation, I think there'll be major re-rating on the stock from here.
Yeah, it's interesting that in that Q3 earnings call, management spoke about trying to extract the value that the stock. I mean it's been very depressed for a long time. It had a little bit of a run on some of the AI, but yeah, as shareholders, it's been a tough journey, and just I guess maybe it was even Monday, they spoke about IPOing the chip business in 2026, and yeah, I think like a lot of these companies, the founder is either the CEO and the chairperson, and obviously in the case of Baidu, Robin Li. I mean, I think this is someone who is looking at that stock price, and I'd assume it kind of makes him depressed. That he's you could do all these comparisons about how much more Baidu and the stock just really I mean Baidu has not they've relisted in Hong Kong, but they do not have a dual share class, which makes them ineligible for Stock Connect. Is that something that you think?
I think it's something there is on their mind. Okay, so I think at some point, I think they are considering it, so they might do that.
So that'd be a nice catalyst.
Yeah, that'll be a great catalyst for stock. So to your point. Okay. And also, I do think the management is very aware of, they're a bit lag compared with some of the other companies, a bit lagging on the shareholder return. So that's an area I think they are very committed to improve heading 2026. So I'm not surprised. I mean, again, don't want to jump gun, but I think just given if we're looking at fundamental improvement across board on their business and continued improvement on cash flow, as well as I think efficiency, like more optimization on the cost side, I won't be surprised if they step up their capital return, whether it's in the form of upsize their existing buyback or essentially issue dividends. I think that's still a possibility at this point. Yeah,
exactly. If you have that cash, it would be reward shareholders for their patience. Yeah. In terms of, I mean, I think we've got the draft for the 15th five-year plan. Heavy emphasis, kind of on the economic and matters, barbell of domestic consumption and then also technology self-reliance. But certainly for JD and Meituan, this restaurant delivery, instant delivery, it's really weighed on their bottom line, net income, EPS. We saw restaurant delivery kind of touched on in the early anti-involution, this excess production, excess capacity, irrational competition. We've seen the regulator touch on this issue twice, but and maybe Meituan, we've seen a little bit of a pickup recently where it seems to be kind of percolating. I mean, are there any changes that you envision where the company's obviously top line is fine, it's just the bottom line to provide all these subsidies, these discounts to try to garner or prevent market share loss? It's really weighed on the stocks.
Yeah, totally. I think a couple of things we have observed recently. Number one, to Brandon's point, like super aggressive promotions throughout the summer, all the way until October, even early November. But I think ever since Double 11, we see the subsidy level has come down across board from Meituan, from Baba. So in other words, I think there's a refocus, reprioritizing on the efficiency seeking and unit economics improvement. So that's why I think 3Q should be the worst, which is largely behind us. From here is really about, I think the pace and magnitude on improvement is still debatable, but at the same time, I think everybody's gearing towards getting better. And that's number one. Number two, I know it comes at fairly big loss, big cost. We're talking about 80 billion RMB investment among the top players. But we also should not forget the fact we actually see substantial I should say, cross-selling opportunities, new user growth, and existing user engagement across board. Like for example, JD's I think quarterly active user grew 40% year-on-year in 3Q. That's really what helped me. Yes, they spend money, but at the same time, I think we're looking at substantial return, at least on the user growth front. Similarly for Baba, they see very strong, I think, user growth in second quarter as well as 3Q. If you look at their like quick commerce channel itself, it's already over like 100 million DAU. So I mean, Baba historically is really traditional e-commerce, right? So it's not high frequency, high touch app, but now it becomes like people actually opening up their app on a daily basis. That's actually part of the reason we heard about Amazon is waiting to do the 30 minutes quick delivery in some of the metropolitan area in the US. I think the same rationale. You want to increase your touching point with consumer, and also I mean from grocery, you can also cross-selling to the health products, basically medicines, and also to some of the other groceries, and some CGs. I think there's substantial synergy opportunity there. Although I mean, initial stage, you want to drive the user growth, and then after that, you want to improve, like increase the transaction volume, the frequency, and to also with the higher density on the network, on the delivery network. That's where you see the improving, I think, ROI in the coming quarter. To your point, yes, it's again fairly substantial loss and margin pressure across board, but we do expect that to get better. And I mean, again, we see how the trajectory will play out in the coming quarters. And policy-wise, I think China government is seriously concerned about the deflationary pressure. So from that perspective, I think these companies are pretty aware. I think even from their perspective, everybody's also talking about more sustainable, healthy ecosystem growth. That just means they want to enlarge the pie. So it basically enlarge the penetration on the local services, on the on-demand services. So that's actually just the first step they're aiming at this point.
Yeah, it's interesting. I mean, that within the CPI, the November CPI was up 7% year over year, up month over month. And it's interesting. You mentioned Vip Shop and their efforts on clothing. Clothing was one of the main, increasing clothing prices was one of the drivers of the CPI. I mean, and again, for questions, please use the Q&A button. I see some questions coming in, and at the same time, also you can email us at info@KraneShares.com. One question will be obviously, is it okay to share this presentation? That's
feel free.
That's fantastic. Okay, so for the presentation, just please email us at info@KraneShares. And I apologize for hogging Fawne. But as you engage investors, how do you think the sentiment? What's your read on investor sentiment to the space? Many of us who have been invested, we've 21, 22, 23, just really difficult years, a whole host of issues. But it really, my sense, the geopolitical is still out there, though I would argue, President Trump, it really feels like he wants to do a deal, is going to go to China. I actually think the renminbi's appreciation versus the dollar, I mean, they're letting it slide. They're letting it move, appreciate versus the dollar. This chips deal, I mean, in poker, that's called a tell. And but what's your sense of investor engagement and because ultimately it's about dollars put to work. And I ran today with Amazon's market cap. Amazon's market cap is larger than every company in K-Web with less revenue and less net income.
To Brendan's point, I think has been unfortunately a couple of really tough years for investors for the China space. In COVID and then post-COVID, a certain disappointment on the recovery curve, like the magnitude and the pace of recovery. So that's why on top we have geopolitical tension. It's just like overall higher risk, relatively muted return. So that's why I think investors shed away more or less from the space. But now, actually, personally, I see a structural catalyst. as we point out. I think AI is a structural catalyst in a sense. I think it comes down to fundamentally to the technology capability. So from that perspective, it comes down, again, we point out resources, policy support, and the talent. So from that perspective, I think you really don't want to miss US plus China. So then that's why I think US, we see substantial share appreciation along with AI, capex increase. And now there's almost like a recalibration in terms of whether the ROI. China's slightly different. First of all, this whole space hasn't really run. We see some mild recovery, but I think it's really nowhere close to Brandon's point, Amazon's market share versus China, ADR as a whole, KREP as a whole. So I think there's in terms of the appreciation on the valuation, I think substantial headroom to go. And secondly, I want to point out, I mean, China AI, on one side is about betting continued advancement, right, for just the large language model, the capability. On the other side, I think China different from US. I think they're really efficiency leader because the way they build their model to begin with, because I think they have limited chips accessibility, so they focus more on the inference, and the inference on the domestic much cheaper chips. So the cost structure is very different from, I think, investors who are using NVIDIA's chips on top of, whether it's Microsoft or Google's cloud, because every of these service providers is going to mark up on the margin. So every enterprise is using a very high cost, couple layer high cost, I think, AI services versus in China, again, chips. I'm not saying that local chips is on par in terms of performance to the global leaders, but at the same time for inference tasks, certain inference tasks, that's what they focus on right now, is good enough. So it's a lot cheaper. They mark up less and they cut through the layers. So from that perspective, it's actually affordable. That's why we see, since I think DeepSeek's breakout in January, the major difference here is people shifting their resources from training to inferences, and then that makes domestic chips good enough to take on the task on the inference side. You actually see explosive growth on the application level. So again, I think if we take internet or the e-commerce as a whole as example, I think when it comes to application level, China has tremendous use cases and tremendous breadth and depth across board. So that's why I think, again, the potential is substantial, and the recognition and valuation is actually very, very early stage. So that's why I feel really, personally, I recommend investors that you probably don't want to miss the boat, miss the train. So, I mean, again, it takes time, but I think China's probably cannot be completely overlooked.
Yeah.
And at this point, I mean, it depends on investors' view, of course, but I think arguing valuation-wise, compared with US, it could be more attractive, more interesting.
Yeah, it's, I mean, certainly I think we're seeing, just the dollar's deappreciation, in euros, Swiss francs, Swedish krona, Norwegian krona, the dollar has really, really declined. And, I think there's some money in motion from those investors just because they're US investments. They're not up 16% or 7%. They're, in the case of Sweden, you actually are hanging a loss on the S&P 500 because the Swedish krona has been so strong. So I think we're starting to see. I do think it's, we've never viewed it as this lens of one or the other. I mean, it's just a huge opportunity in general. I mean, it's interesting. We're getting a lot of questions around semiconductors, and obviously we talked about Baidu and their chip unit, the Kunlun, which we'll see as they spoke about IPOing it, but obviously CamberCon this Moore's Thread. I think that IPO went up like 400+% this first day of trading. But I mean, I think it's interesting that there is enthusiasm for the NVIDIA chips, not just the Blackwell, but even these H30s. Certainly the low end NVIDIA chips I don't think are competitive from a price perspective versus some of the local players. But you know, how have the underlying companies navigated
Yeah,
some of the you know the Biden export
yeah,
restrictions, as well as, you know, what's your sense of the local players' ability to compete with some of the NVIDIAs and Qualcomms, AMDs, et cetera?
yeah, totally right. A couple of things. Like first of all, on the application level, on the usage level, I think because the chip embargoes ongoing continued
Yeah.
until up this point, I think China cloud service providers have developed they call one cloud multiple chips. I think capability. That just means they have one infrastructure, but they are able to incorporating different sources of chips, whether it's globally, NVIDIA, AMD, or China domestic chip suppliers. So they actually also be able to prioritize the chip usage based on the specific tasks they are fulfilling. For example, the high demanding, I think, training tasks, they probably will leverage more of the international top class, I think, chips. And versus, I think it comes down to the inference level and even the inference level have different, I think, almost a requirement on the chip performance. So they really granularize, segment different, I think, chip classes to make the best use out of it. So that's why we're talking about efficiency, competitive edge here. So to that point, I do think that will continue to be the strategy for the China cloud suppliers. Because over time, yeah, as much as I think depends on the U.S. policy, whether they're going to open up more advanced chips to China, whether, I mean, there's debate whether on the Blackwell side, but I think China domestically, especially from China government perspective, they will continue to promote, I think, domestic produced chip. I think just the direction they're going regardless. Although, certainly in the certain period of time, when when their technology are not on par, I think they will try to leverage the resources and the exposure or the availability of the chips. So I think they're going to continue to use global resources plus domestic, but at the same time building up domestic supply chain, which, I mean, of course, take time, but I think we'll just continue to advance. To a point, I think, yeah, that seems to be the trajectory they're going to take on.
Yeah, it was you know, in probably about a little more than a month. You know, in one of our we're introduced to the semiconductor analyst for a firm, and they spoke about, you know, it's to do the high end, it's going to take a long time,
Yeah.
and at the same time, you know, yes, on the lower end they can compete, but also, you know, just with technology itself, it's, you know, it's going to be, you know, you know, people are going to find ways if it's through cloud or cross shipping. So I think it's yeah, it's an interesting space. I mean, obviously, some of these companies like CamberCon and Moore's Thread, because they're listed in China, you know, it's really the only way for local mainland Chinese investors to play some of these. And that's where you see these very high valuations, just because of that closed capital system. But
Yeah,
uh,
people also probably buy for the future, right? So
yeah,
yes, they're small now. Again, I'm not semi
yeah,
expert, but based on our own StoneX semi analyst estimate, he was basically mentioning, I mean, China market, chip market right now, now you talk about future right now, 80 billion USD. So it's still majority coming from NVIDIA, of course. But if you look, you believe China domestic, um, like a chip provider manufacturer will come down to 20% market share, 30%, 50% at some point. That's tremendous, I think, growth opportunity there. And also, when it comes to chip, it's not everybody, it's a very high, I think entry barrier. So I think there are only, handful companies can do it, will probably be relatively permitted to do it. So from that perspective, it's like really the top players going to take more the lion's share. So that's why people focus on Huawei, focus on the chemical, focus on more threat. So, but people miss Baidu here. Just a reminder.
yeah, exactly. It is an AI play for sure.
Sure.
And I know we're at at the top of the hour, and I know we've got a few disclosure slides we should walk through. But certainly, yeah, Fawne, we always appreciate your insights, and yeah, I think we are constructive on the space. I mean, we're long only managers, so we're talking our book, and professionally, but also personally as an investor in KWeb, and yeah, I just really hope yeah, some of the geopolitical narrative, as we get moved toward a Trump-Xi summit, potentially a bigger this truce delve into something potentially bigger, a bigger deal. That geopolitical, I think, headwind that's weighed on the space will alleviates, but certainly we're seeing investors globally come back into the space. So yeah, certainly very much appreciate you taking the time to visit us, and always appreciate your insights. And again, if you'd like to receive Fawne's deck, please email us at info@KraneShares.com. And with that, certainly on behalf of KraneShares, as well as our friends at StoneX, wish you and your loved ones a happy and healthy holiday season. Thank you so much, and looking forward to seeing you in 2026.
Thank you.